Welcome back, and as promised in the previous video, in this class or in this video we'll be solving a few problems relating to corporate accounting unit 1. Okay, so just a quick reminder on what we have discussed so far. We talked about a company, okay, the meaning of the company, and then we talked about share capital, the meaning, definition of share capital. Additionally, we also saw the different categories basically of share capital: your nominal, issued, subscribed, and so on and so forth. We saw the different subclassifications of share capital, and then we saw the two important kinds of shares that we have: your preference shares and your equity shares. And we also talked about the different kinds of the preference shares and the features as well of preference shares, along with the features of equity shares as well. And then we talked about issue of shares, how shares are issued, and we know that shares can be issued at three prices: at par, at premium, and at a discount. Okay. And besides that, we talked about legal provisions pertaining to issue of shares at premium and legal provisions pertaining to issue of shares at a discount under Section 78 and Section 79 respectively of the Companies Act 1956. So as we said, moving on to problems, let's look at the first problem. It's a very simple problem, something you must have already seen in school, but just as a reminder for us on the issue of shares and all that, we'll just look through this a few questions first. So Eastern Company Limited issued 40,000 shares of rupees 10 each to the public for the subscription of its share capital, payable at rupees 4 on application, rupees 3 on allotment, and the balance on first and final call. Applications were received for 40,000 shares. The company made the allotment to the applicants in full. All the amounts due on allotment and first and final call were duly received. Give the journal entries in the books of the company. So before you solve the problem, always make sure you're going through the problem once or twice just to understand exactly what has been asked and how to solve the problem. Okay, so let's start with solving of problem number 1. Problem number 1, let's start with, just writing down some of the relevant information first pertaining to the question, and then we'll move ahead to solving the question. Okay, so it's given you have 40,000 shares issued. So number of shares issued equal to 40,000, and this is, they've given to you issued 40,000 shares of rupees 10 each to the public for subscription of a share capital, payable at rupees 4 on application, 3 on allotment, and balance on first and final call. Now they've not mentioned anything whether there's any excess, whether the price of the shares. So we are going to assume that the share has been issued at par. Okay, nothing has been mentioned whether it's a premium or a discount. So we are going to assume it has been issued at par. So issue price is rupees 10. Now this rupees 10 is going to be subdivided as rupees 4 on application, rupees 3 on allotment, and balance on first and final call. First and final call. There is only one call, and this call is termed as a first and final call. And they've set balance. So 10, 4, and 7 rupees, 3 is your balance. Okay, so this is the amount we have to charge on each of the calls. And they've given also applications were received for 40,000 shares, which means you've issued 40,000, people have applied also for the entire thing. Okay, so all of these shares have been applied for. And the company made the allotment to the applicants in full. All the money due on allotment and first call and final call were duly received. Now give the journal entries in the books of the company. So let's start with the preparation of the journal entries. Okay, so journal entries, you know how to prepare it: date, particulars, and all the debit and credit column. Okay, so prepare that in your notebook as well. And this is in the books of Eastern Company Limited, and we can write it as journal entries. Write it in full, okay? Write it in full, journal entries. Okay, so the first entry is obviously on application. Now on application, remember, whenever there is the application of shares, firstly you'll receive money, and then after that you'll transfer the money to a share capital account. Okay, firstly you will receive the money, because let's take for example also when you are having in case of schools, in case of colleges also, firstly the people who want to apply to the school, they will buy a prospectus and then they will give their application money, right? So after they've given the application money, only then will that money be transferred to whatever account it is. Okay, so here also we're going to follow that exact procedure, wherein you've opened 40,000 shares, and these people are going to apply to it. Whether they get it or not depends upon the company. Okay, so now because they are fully applied for, fully received also, so entire 40,000 will be the number of shares that are going to be given to the subscribers as well. Okay, so in the date column, nothing has been mentioned regarding the date, so we'll leave it blank. All right, so let's start with the application. So in case of application, as I've mentioned, you're receiving money first. So when you're receiving money, it should be bank account debited to whatever account it is, right? So in this situation, application money you're receiving. So bank account debited to share application account. So let's write that down. Bank account debited to share application account. Make sure you're writing it in full. All right, so you have 40,000 shares at the rate of ₹4 on application, so ₹4. Okay, so the amount you're receiving, 1,60,000 rupees on share application. Now remember, we also have to write the narrations when it comes to journal entries. So for this, we can just write being amount received on application for you can end it here, or we can proceed and write further also. Being amount received on application for 40,000 shares at ₹4 each. Okay, this is our first journal entry with regards to application. Now that you have received the application money, the next step is to take that share application money and transfer it to share capital. Why? Because all of these, right, they're all part of our share capital. They all belong to one account, but they're subdivided in the different names. So we now have to transfer the entire thing to the main account. So let's transfer it. Let's transfer the amount. It'll be share application account debited to share capital account. Okay, so the entire amount is being transferred to the share capital account. And for this, we can just write a small narration, being application money transferred to share capital account. Being application money transferred to share capital account. And again, narration, remember, it's how you perceive or how you understand the transaction that you've made. So you can write it depending upon your understanding of how you have recorded the journal entry. Okay, so moving on. In case of share application, you've received the money, you've transferred it to share capital. You're done. Okay, there's nothing left for share applications. Let's move on to share allotment. Now, in case of share allotment, firstly, you have to call it, and only then will you receive the money. Okay, first you have to invite people, and only then will people come to your party. Basically, that's what it is when it comes to allotment and your other calls. Okay, firstly, call and then get the money. So when you're calling, when you're demanding for money, the journal entry will be share allotment account, debited to share capital account. The amount being 40,000 shares, and on allotment we see it as ₹3, correct? So at the rate of ₹3, 40,000 shares at the rate of ₹3. Amount to be called is ₹1,20,000. Since everything is received in full, we'll just receive the entire money. So when you're receiving money, it'll be bank account. Oh yeah, before that, sorry, narration, right? So narration, we can write it as being amount due on allotment, being amount due on allotment called up. So you may also write how many number of shares and the rate also if you want, just like how we did in application. Okay, so let's receive the money. Bank account debited for what you're receiving for allotment, correct? So to share allotment account amounting to rupees 1,20,000. Narration, being amount received on allotment. Okay, being amount received on share allotment. And then finally you have your third and final call. Now in case of first and final call, first and final call, it is rupees 3 only. Now first and final call, only share application is different. The rest from allotment onwards till the final call, the journal entries remain the same. So it will be these two entries only. We'll be repeating them once again. So it will be share first and final call account debited to share capital account. Same narration. Amount is rupees 1,20,000. Okay, 1,20,000. Why? Because 40,000 shares at the rate of rupees 3 each. And the last entry will be receipt of the money. So bank account debited, received on what? On share first and final call, right? So to share first and final call account amounting to rupees 1,20,000. Narration, being amount received on first and final call. Okay, so that's it for the first question. We just had to go through these journal entries only, that's why. Okay, that's why I gave you this question, just so that we can go through the journal entries. See, just a quick reminder for ourselves also as to what the journal entries are, what the journal entries are which we'll be using when it comes to this particular chapter. Okay, so this is solution to question number 1. So that was a very simple question. Moving on, let's look at another question. ABC Limited issued 1 lakh equity shares of rupees 10 each to the public at par. The details of the amount payable on the shares are as follows, and they've given you date, the call, and the amount per share. Okay, so as on 1st of April 2017, for application, it is rupees 2 per share. And then as of 1st of June 2017, for allotment, it is rupees 3 per share. And as of 1st of July 2017, you have your final call, which is rupees 5 per share. Application monies were received on 1,20,000 shares. Excess application monies were refunded immediately. All other amounts received excepting final call on 1,000 shares. So they've told us to pass the journal entries to record the given transactions. Okay, now when it comes to this particular question, there is an oversubscription of shares. Now, when I say oversubscription of shares, it means the amount of shares that has been subscribed to by the public is more than what is being offered by the company. So here you will see they issued only 1 lakh equity shares, right? Yeah. So they issued in this question only 1 lakh equity shares, but out of that, application is received on 1,20,000 shares. So you have issued 1 lakh, but you have received 1,20,000, which means excess amount is 20,000 shares. Okay, excess is 20,000 shares. So any amount that you're receiving beyond 1 lakh should be, basically what they're saying is it should be sent back. Okay, it should be given back, refunded immediately. It should not be transferred to your share capital. And all other amounts received excepting final call on 1,000 shares. Now, if they're saying accepting final call on 1,000 shares, it means the amount on 1,000 shares is not received. Therefore, this is termed as a calls in arrear. Okay, while I'm sure you know of this concept already, we'll be dealing with it a little bit again in the future. Maybe I'll give you a few notes based on calls in arrear. But yeah, this is just a small introduction into that particular topic. Okay, so this question will have oversubscription as well as calls and arrears. Okay, so let's deal with that really quickly now. So again, before we proceed with actually solving the question, I just like to write a brief through of what the question is about. Again, if you don't do this also, it's fine, but it's just something that I like to do to make it easier for me to solve my questions. Okay, so number of shares issued, 1 lakh equity shares, and the shares are issued at par. So issue price is equal to rupees 10, which is subdivided as rupees 2 on application, rupees 3 on allotment, and you have rupees 5 on final call. And further, they've given application monies received on 1,20,000 shares. So subscribed or be applied for, you can say applied for is equal to 1,20,000 shares, which means therefore over subscription is equal to 1,20,000 minus 1 lakh is equal to 20,000 shares. Okay, so there's an oversubscription on 20,000 shares, and all other amounts were received excepting final call on 1,000 shares. So call in arrear is equal to 1,000 shares on final call. Okay, so I have all my details laid out for me. Now I'll proceed with the journal entries as they've asked for. Okay, so journal entries in the books of, in this situation, it is ABC Limited. Okay, journal entries. So you can proceed with writing date, particulars, all that. Okay, so date, particulars, and debit in rupees, credit column in rupees. Okay, so just like previously, when it comes to share application, first we'll receive the money and then we will transfer it to the share capital account. So they've given dates when it comes to this part. So they've given you as on 2017 on application. This is 1st of April. So on 1st of April on application, first we'll receive the money, bank account debited to share application account. Now on share application, you're receiving, they've applied for 1,20,000 shares. So we're receiving money on 1,20,000 shares at the rate of rupees 2 each. Okay, so at the rate of rupees 2 each, total amount received is 2,40,000 rupees. Okay, I hope it's okay till here. Now we have to transfer the amount. Now we know that there is an oversubscription to the extent of 20,000 shares, right? There's an oversubscription to the extent of 20,000 shares, and in the question they've given clearly, excess application money were refunded immediately. Now if you want to refund any money, firstly you have to receive it, right? So we have received the money. Now we can give it back. All the money that we've taken, that we don't need anymore, that we cannot use, we have to give it back to those applicants. So it'll be on the same date itself. From the share application money, some amount will go to share capital. Okay, some amount will be transferred to share capital, whereas the remaining amount will be sent back to the shareholders. Okay, so let's write this down. Share application account. Share application account. You have a total of rupees 2,40,000. Okay, share application account debited 2,40,000. From the share application account, remember we said a portion of it is to be transferred to your bank account and another portion is to be transferred or to be given back to your shareholders. So to share capital account, and excess application money to be refunded, therefore it should go from bank account, therefore to bank account. Okay, so number of shares issued is 1 lakh. To figure out how much should go to share application, how much should go to bank account, total number of shares issued is rupees 1 lakh. So share application, share capital can only have 1 lakh shares at the rate of rupees 2, and bank account will be, your excess is 20,000, right? Over subscription, so it will be 20,000 at the rate of rupees 2. Okay, so here will be 2 lakhs transferred to share capital, and the remaining amount 40,000 will be given back to the applicants. Okay, so make sure you're writing the narration being amount received on share application transferred to share capital account on 1 lakh shares at the rate of rupees 2 each, and balance refunded to the applicants. Balance amount refunded to the applicants. Okay, should I write that down? Let me just write that down just in case you didn't get that. Being share application money on 1 lakh shares transferred to share capital account, and balance refunded to applicants. Okay, balance refunded to applicants. Now after that, you have your share allotment and share final call, which is basically more or less the same as the previous question. So I'll just write this down really quickly. Okay, so when it comes to share allotment, firstly it will be the share allotment due. So share allotment account debited to share capital account. Now in this situation, remember, we gave back already the amount on 20,000. We are rejecting the remaining 20,000 shares, so only 1 lakh shares. 1 lakh, and on share allotment it is rupees 3 per share. Oh, before that, I forgot to write the date. This is as on 1st of June. Okay, so share allotment money rupees 3 lakhs. And then you can write the narration, and now let's receive the money. Bank account debited to share allotment account, amounting again to rupees 3 lakhs. There's no changes for share allotment because there is no point in effect of that. Okay, so finally you have the last amount, which is your final call. This is as on 1st of July 2017. Okay, so firstly the due entry, share final call account debited to share capital account, amounting 1 lakh shares at the rate of rupees 5 each, so rupees 5 lakhs. This is how much is due. Okay, now in the question, if you recall, clearly they said that all other amounts were received excepting final call on 1,000 shares. Okay, there's a call in area of 1,000 shares, which means out of 1 lakh shares, 1,000 will not be received. You'll be receiving only on 99,000 shares. So let's receive the money. Bank account debited to share final call account. So if you're not receiving on 1,000, it'll be 99,000 shares at the rate of rupees 5 each. Correct? It'll be 99,000 shares at the rate of rupees 5 each. So 4,95,000. 4,95,000 is the amount we are receiving on share final call. Okay, so you may write the narration as being final call amount received. Okay, or you can even extend it by writing being share final call amount received except on 1,000 shares. Okay, so as simple as that. This is the how you deal with in case of calls and errors, and in case of oversubscription, where you reject all of the applications that are received on the excess applications on oversubscription. Okay, so this is problem number